Good evening, friends. And on this auspicious day of Hanuman Jayanti and Chaitri Punam, we are going to learn on GST. We are going to play ICAI motto song for the members.
Should we stand up? We can stand up at our place.
Or sir, we can do like this.
Out of video.
So now I request Chairman of Ahmedabad branch, CA Fenil Shah, to give his opening remark of this wonderful 7 days journey of GST webinar series. Thank you.
Thank you, Vishen bhai. Great to start any webinar or any series by respecting to our own alma mater, and that we continue to do in every session. The speaker for the day, Vaitheeshwaran ji, respected Central Council member Sushil Goyal ji, in absentia Aniket Talati ji join. Sir, I would like to say that it's not only the Ahmedabad branch, but various 6 branches of Gujarat is joining us right now together. So I would also like to welcome CA Vinay Sakaria ji, Rajkot Chairman branch, CA Bhavesh Thakkar, Anand branch chairman, CA Manoj Goyal, Bhavnagar branch chairman, CA Jitendra Jha, Bhuj Thakkar, Bhuj branch chairman, CA Karan Thakkar, Gandhidham branch chairman, CA Dipesh Bhuj, Jamnagar branch chairman. Sir, we are having of webinars right now going on. Apart from this GST series, we are also having FEMA series, we are also having Direct Tax series, and we are also having the Bank Branch Audit series. I would also like to welcome Tax Committee Chairman of Branch, CA Rahul Maliwal. Friends, before I hand over the charge to Sushil Goyal sir, I would like to share that today evening you will receive one link from Ahmedabad branch. Friends, we all are working from home. We all are staying home. Every one of us might have one or some another thought crippling into mind that this should be done in order to save our economy during this lockdown and post lockdown. So I request you all that just give a pondered thought, a deliberated thought, that what in your view as a responsible citizen, as a responsible intellectual chartered accountant should be done, and what we can suggest to Prime Minister to bring our economy back to normal. I can understand that our economy is not going to come as earlier normal soon, but what can be done, bring our economy normal. And I would request you all to give your views to branch. We will arrange it, we will collate it, and we will forward it through our Central Council member to an appropriate forum, so appropriate steps can be taken on the same. So that's a small request from my side. Again, I thank you Sushil Goyal ji and K. Vaitheeshwaran ji to join this webinar. Now I would request Sushil Goyal ji to give an opening remark on this inaugural session of the webinar.
Thank you, Fenil. Thanks, Vishen. Thanks, Aniket, for this wonderful organization of the webcast. We have K. Vaitheeshwaran, a finest speaker, I can say. I heard He was in Calcutta also some time back. So it is definitely helping all our members who are at home to learn various topics. And congratulations to Ahmedabad branch for organizing, giving this opportunity to members also. And despite they are at home only, all the branch organization committee members, they are despite at home arranging everything for members. Salute to them. Now I can see Aniket Bhai also there. Aniket Bhai is managing this digital learning hub of ICAI. Friends, you must be aware that this digital learning hub giving 10 CP hours, not 10 CP hours, I should say 10 structural CP hours. Unstructural, n number you can do there, no restriction on that. 10 structural CP hours is being organized by ICAI in digital learning hub, and all credit goes to Aniket Bhai sitting in Ahmedabad managing entire affair of ICAI as far as digital learning hub is concerned. So hope you will have a wonderful learning time. GST, number of time I read, I find it more complicated. So hope after this seminar you will able to resolve few of the complications. Now over to organizers again. Thank you.
Thank you, sir. Now I would request Aniket Talati ji to also give the opening remarks.
Thank you very much, Fenil Bhai. Most respected Sushil Goyal ji, who is currently the Vice Chairman of the GST and Indirect Tax Committee. Last year he was the Chairman, and immediately preceding 3 years, that is when GST was actually born, he was also the Vice Chairman. Somebody who has tremendous experience in this domain. Thank you, sir, for coming to this session and inaugurating it. We are thankful for your presence and motivating words. My special thanks to Vaithi sir for starting this seminar. As usual, we have in cricket Virat Kohli opening the innings. Similarly, no better person than Vaithi sir to start this I think long series on GST that we have planned. My compliments especially to Vishan Bhai and Rahul Maliwal, both managing committee members of the Ahmedabad branch, who have put in so much effort to coordinate this entire series, think of the topics, speak to all the faculties, and also set up this entire technological platform. Vishan Bhai, you are doing a fantastic job as secretary, and also Fenil Bhai, you are leading from the front by providing this platform. Rahul is not on the screen, but he has put in a lot of efforts, so I acknowledge that. Friends, I think very important, I shared this in the morning also, and I think I can't repeat it enough, that this lockdown is only a physical lockdown. Let's not make it a mental lockdown. We need to unlock our actual potential during these days. It's a wonderful God-gifted opportunity given to all of us to reskill ourselves, to relearn, to probably unlearn, especially in the era of GST, when there are changes that happen on a not a weekly or a monthly basis, but probably on a daily basis. It's very important for you to keep pace. I think there's opportunities and seminars and series like this which give us the challenge and the opportunity to get ourselves refreshed with all the basic concepts of GST. And I think most importantly, it's just so heartening to see that without CPRs on a working day, of course now Sundays and working days are almost same for all of us at home, but yet in the evening there are 500 plus participants who are attending this seminar right now. It's a great achievement, great feat for everybody, and I'm sure that the Ahmedabad branch, on whom there is a huge expectation from members, not just of the city of Ahmedabad, but the whole state of Gujarat, will keep living up to the expectation under the chairmanship and leadership of Fenil Bhai. A lot of other activities are being done, and we are also now in the process, friends, of special request to all of you is at the institute we are in the process of collecting all the information, suggestions from all of you and your clients regarding what should be done after this lockdown is lifted. There will be economical challenges, there will be financial fiscal challenges, and also tax challenges that the government and industry both will face. At the ARF today we are sending out a survey and an email to all members across the country to give any suggestion that is in your mind. It may be from the government's perspective, it may be from the industry's perspective. So please come out with your suggestions and speak to your clients where you feel there will be pain areas and where you think institute must do its task and represent appropriately. I can only assure you that at the institute we are partnering with the nation in facing this challenge of COVID-19. The institute has already decided and targeted to contribute 5 crore rupees to PM NRF and PM CARES fund. It is already on its way. Plus, some additional contribution is being planned and discussed. So I'm hopeful that the chartered accountant community can actually live up to the tag of partner in nation building in this crisis time. And we will see that when we fight back, there is a V-shaped recovery that actually happens in the economy. There will be pain in the short term, but in the long run, only if the industry survive, only if the business survive, can professionals also prosper. So let us hope and prepare for the better days to come. I once again compliment the entire team of Ahmedabad branch for this seminar. Thank you, Vaithi sir. Thank you, Sushil ji, for your presence. I hand it over back to the branch manager. Thank you.
Thank you very much, sir, for your opening remarks. Sushil sir, we are really indebted to you. Last couple of years that you are giving services to the institute as a chairman, vice chairman, and the way we the document and the capacity has been built at the institute level. We are indebted, sir, for such a selfless contribution to the fraternity. Thank you very much for coming and gracing us with your presence and your keynote address. Thank you very much, sir. Thanks.
Thank you.
Now I request Vaitheeshwaran sir, as our chairman of Indirect Tax, Rahul Maliwal is there. Rahul Maliwal, yes, Rahul.
Rahul bhai, you are not visible, but you can speak. You are audible.
Yeah.
Okay, thank you so much. Good afternoon, everyone. Welcome you all in the very first day of the extensive GST web series. This series of the 7 days covered almost all the important aspects of the GST. This series would be beyond the basic knowledge, and the today's speaker we have is the Vaitheeshwaran sir. Sir, as such, you require no any introduction, because you have blessed us with your immense knowledge so many times in RRC as well as at national conferences, sir. But still, in nutshell, I'll summarize it that sir is an advocate based from Chennai, appearing before the various high courts and apex court in the matters of the indirect taxation. His wisdom is unmatchable. Thank you so much, sir, for your precious time. Now request sir to please carry on the further. Thank you so much, sir.
Thank you, Rahul. Good evening. Good evening, Sushil ji, my good friends, Fenil, Aniket, Vishan. Good evening to all of you. And so many friends who are connected digitally to listen to this. It's unfortunate I cannot see each of you, but I can visualize many of your faces, because I'm not new to Ahmedabad. I've come so many times to Ahmedabad to speak and address lectures. It started early days in service tax, and then the RRCs of the branch, and so many conferences. So I know many by name, many by face. So it's nice to see at this point of time that we are all able to gather together, and technology has brought us together to discuss something interesting. Before I go deep into my subject, we are definitely in extraordinary times, and it is something new for all of us. The world will change, and we would adapt and move forward, but it would take some time, as all the other speakers also said. It's also a fact that this is unprecedented, and every solution is also an experiment. So even this lockdown could be an experiment. It could extend, it could partially extend, we don't know. But the time that we get, now I'm addressing the youngsters. When I say the youngsters, I'm talking about people who are above 50. They are the youngsters in my view. The youngsters are much more smart. People who have crossed 50 is a little more relaxed. They could take it, as a holiday. But let it be an interesting challenge. If in this 21 days or plus, if you manage to acquire another new skill which you did not have before, it could be anything. Could you be learning Excel, for all you know, or learning something very simple? It's something that's something which you've achieved, because this is the God-given rest, God-given time, which is unbelievable. And while I do appreciate your academic interest in joining this seminar, I'm sure all of you have a selfish interest. Since 500 odd people are at home, you're looking at staying at home 24 hours with the respective spouse. And after a point of time, relationships get altered, or we see each other for 24 hours. And then there is this helping game and cooking games, cleaning games. It's all some of them are successful, some of them fail. So at every point of time, I'm sure every professional was looking forward for a break, or looking forward for a scenario where they can go to work. And they found a God-found opportunity when webinars are being organized to enrich knowledge. So all professionals have moved away from the hall and the kitchen and any other territory to a small corner to say I'm working. So I'm sure it is not only knowledge, but also the fact that everybody is addicted to work or addicted to knowledge that has brought them here. So be it. I'm also equally guilty on that. My family has left me alone in this room, so I'm able to spend some time on this subject too. We'll now go through the slides. It's a simple presentation, but I'll try to give. Yes.
Sir, your slides. You need to share your slides.
Yeah, Vishan is organizing it. Vishan ji?
No, sir, you need to share.
No, we tested out. The whole thing is with Vishan, and he's touching moving the slides.
Okay.
Vishan, are you on?
Actually, he is facing some issues, so he's
Okay.
he's having technical difficulty. Sir, you continue. I try to get back to him.
Yeah, doesn't matter. I'll go without slide. Let it be extempore. Doesn't matter.
Yes.
And
yes.
we are all aware of. I may make errors because I don't have notes or I don't have the PPT. Please bear with me. The fact remains that the 101st constitutional amendment changed everything, and we got into a completely new era of taxation, and we got into a completely new mechanism through which tax is levied. So, just to give a glimpse of the past, prior to the 101st constitutional amendment, we were in a strict entry-based regime where a particular subject was identified through an entry called as union list or state list, and the power to legislate and levy tax flowed only from that entry. So it was always a lawyer's paradise to say that this particular item does not fall in this entry, therefore not taxable, or this particular item overreaches and falls into some other entry and therefore not taxable. Or it was also easy for the revenue to look at how each entry should be interpreted or each provision should be interpreted, which led to what we commonly call as double taxation, which led to this distinction between goods and services being lost over a period of time. And therefore, all kinds of litigation followed. And finally, Government of India also realized that the cascading effect of tax is one of the key disputes that exist in the existing pre-GST regime. And the only solution is to bring about a system which encompasses all transactions and to have a smooth credit system. Of course, that was intention. What happened was completely different. So with that background, the 101st Constitutional Amendment brought about what is known as Article 246 capital A. So Article 246 capital A is a non-obstante article. It overrides 246, which deals with the other aspects of entry-based taxation, and then talks about saying that the Parliament as well as the state legislature shall have the power to levy what is called as, to legislate on what is called as GST, which was also defined, whereby it is a tax on supply of goods or services or both. And for the first time in history, the Constitution also chose to define services. Goods was already defined in the Constitution. Services was defined for the first time. Yes. Hmm. 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 Okay, right. Let me know.
Vaitheeshwaran sir,
Yes.
I request you that for time being, just 5 minutes, you continue without slides. There is some technical error. We are sending the PPT within 5 minutes to all the participants on their email. So along with seeing you, they will be able to view the PPT.
Okay.
To all the participants in 5 minutes. Till then, you can continue.
Okay. So they can hear me now.
Sir, you're audible. Yes, sir, you're audible.
So with that background, the 101st Constitutional Amendment brought in Article 246A, as I was saying, and that gives the power to both Parliament and the state legislature to enact what is known as the GST Act and levy taxes in the form of GST. And of course, the Constitution also paved the way for the creation of a GST Council, which is an all-powerful body, being a constitutional body. And the GST Council, which was originally planned to meet just 1 or 2 occasions, has gone beyond 1 or 2 occasions and has met multiple number of times and has governed and has examined every aspect of GST as it moved forward. So in a way, it has been a live environment of GST. It is not like a legislation which has been enacted and then people watch and play, but the legislation is continuously watched by the council. The rules are continuously changed by the government, which, while some people say that it is positive approach and a proactive approach, it also contributes to significant confusion because each rule has been amended multiple times and retrospectively. So at some point of time, even professionals find it a big challenge, as one of the earlier speakers was mentioning, that it is not easy to keep track of the amendments. And even if you keep track of the amendments again get ineffective by a retrospective amendment. So it is a huge challenge. I'm not denying that it's a huge challenge. And we also got into the technology part of it, and the portal created its own challenges. So from a professional's perspective, this is actually a rest period, in the sense that they don't have to break their head over the portal for some time. They don't have to answer complex questions from the clients with reference to rules which keep changing, whether it is 10% calculation, whether it is 20% calculation, whether the calculation should be done in aggregate or the calculation should be done separately for CGST, SGST, IGST, what happens to items which do not have an invoice, and all those questions. So coming back to my perspective, which is the levy, I'll focus on the levy. So I'm sure you'll get the slides over a period of time, but with that, just bear with me. Most of you are aware of these questions, so I don't have to bother about it. Article 246A, so 8A within bracket 2, talks about Parliament having exclusive power to make laws with respect to GST, where the supply of goods or services or both takes place in the course of interstate trade or commerce. So let me stop here for a moment. Why did Parliament decide to have Article 246A2? While everybody is very clear on what is IGST and the fact that it facilitates movement of credit and it's only an adjustment mechanism, we need to think a little bit as to why IGST was needed. For that, so there are seniors whom I know in Gujarat, Ahmedabad itself, who have very good practice who used to have practice in sales tax, would know that the Central Sales Tax Act 1956 was enacted only for the purpose to ensure that there is clarity on levy of sales tax on interstate sales. For example, if somebody was selling goods from Gujarat to Maharashtra, before the CST Act, there was a problem because the Gujarat tax authorities would say that the seller is in my state, I have a right to levy tax. The Maharashtrian authority would say the buyer is in my state, therefore I have the right to levy sales tax. So there was what is called as a nexus theory, whereby every state tried to exercise the power to levy tax on sale of goods or purchase of goods on the premise that somebody is there in their state. Therefore, this confusion went on to various judgments, and judgments after judgments came saying that there is nothing wrong in this. And therefore, Parliament had to step in and decided to enact what is called as a CST Act to clearly say what is an interstate sale and who gets the right to tax it. And that is how the originating state got the right to levy what is called as a CST. And therefore, in Gujarat sells to Maharashtra, Gujarat levied CST. Central Sales Tax Act is the precursor to the IGST Act. The whole language, if you see the way it is structured, it has tried to emulate the CST Act, but somewhere it has lost its objective. If you look at the CST Act, it was very, very clear that the objective was to identify what is an interstate sale The objective was to identify what is an export. The objective was to identify what is an import. In fact, for an interstate sale, they said the originating state can tax it. For an export, they very clearly defined what could be an export and said nobody can tax it. And similarly, for import, they said there is no tax. Now, when it came to IGST, it kind of cartwheeled. And while they retained this concept of interstate supply in a different format, export has gone on the premise that it is taxable. If you look at section 16 of the IGST Act, what it envisages is that you export, pay tax, and collect refund. But in the old legislation, when it was CST Act, there was no levy of tax on export. In the old legislation, when it was central excise duty was only on manufacture, it was not on export. Because you had manufactured and removed from the factory, duty came, not because you exported. So for the first time, IGST, which is supposed to define or deal with what is dealt with interstate transactions, kind of exceeded the mandate and tried to levy tax even on exports with their own safeguards and rules and formulas for refunds, etc. But therefore, Article 246A, in my view, sub-Article 2, is a very critical rule in the sense that it identifies what is called as a mandate as far as interstate sale is concerned, interstate supply is concerned, and how it can be taxed. Now, moving on to the next article, which is also critical, Article 269A, goods or service tax on supplies in the course of interstate trade shall be levied and collected by the government of India. So this now makes it very, very clear that who gets the right to collect this. Now, if you don't have this kind of a provision, you will have the same nexus problem coming which came in the past. And then you have an explanation, Article 269A, which says that supply of goods or services of both in the course of import into territory of India shall be deemed to be a supply in the course of interstate supply. Now, this is a very interesting point. Transaction which is in the nature of an import is deemed to be an interstate supply by an explanation in the Constitution. Where is a similar explanation for export? So the larger question is whether IGST Act has gone beyond the mandate of this explanation, because the explanation seems to be confined with import and does not talk about export. So how does an IGST levy fasten itself on an export transaction? Is a larger legal question, which we, of course, we'll be addressing at some point of time. So as I said, we have moved from sale, we have moved from manufacture, we have moved from service, and we discovered a new world called supply. Now, if you look at section 7, all of us have read section 7, all of us have lived through section 7, lived the length and breadth of section 7. We have attended enough seminars in section 7. But now that we are trying to revisit all these things, nothing wrong in revisiting section 7, which is important. A lot of people have told me that, sir, the word supply includes, and therefore include should be viewed in a very, very wide manner. Agreed to some extent. Includes is definitely a wide definition. But interestingly, section 7 is not the charging section. Section 7 talks about what is a supply. It is somewhat akin to the income tax definition of income under section 224, which says income includes. But over a period of time, the income includes definition had to be expanded to cover many categories because it was not adequate. Now the question is whether the supply definition is adequate. So there are 3 clauses in this. All forms of supply of goods or services or both. Now please focus on the word all. All forms of supply of goods. All is everything. So then what is the purpose of having the word includes? If supply includes supply of goods or services, we can say inclusive meaning can be a very extended meaning. But if you say supply includes all forms of supply, all is complete by itself. There is nothing further than all. There cannot be anything extra which can get captured in the includes. So that all becomes significant when you start interpreting. Because now we are in the 3rd year, and by the time all this happens and the economy comes back to normalcy, even though the government is very kind now and government is very helpful and in all steps and assuring industry that it will hold their hands, etc. All this will happen for some time, but afterwards the tax will become tax again, and tax collection will start collection again, and therefore interpretations will start again, and therefore we may have to go back to basics as to what would be supply. So all would, in my view, would take care of everything. All forms of supply of goods or services of both, such as. Now the such as is normally identified as an illustrative mechanism. Whenever the word such as is used, it is identified as illustrative. But if you look at each of these words, such as sale, transfer, barter, exchange, license, rental, lease, or disposal, except the word disposal, every other item seems to indicate there must be two parties. Sale, it contemplates two parties. Transfer means one is a transferor, another is a transferee. Barter is always two parties. Exchange is always two parties. License means one fellow has to own the rights and then give the license. Rental means there must be somebody who owns something and gives it. Lease again is like that. Disposal alone is something that cannot be, it could be an auction, it could be something else, not be a direct two parties. But this, except the word disposal, all other terms used there seem to indicate the existence of two parties. Made or agreed to be made for a consideration. In fact, there are a lot of thought process going on saying that because of this COVID, medical equipments and medical gadgets and medical articles should be supplied free of cost, which many companies are voluntarily doing it, and some are going out of their way and trying to supply these items. One view that is emerging is that to manufacture these items, they are incurring a lot of costs, and therefore, if this is not taxable, they may have an input tax credit impact. Now, let's look at it this way. If something is given free of cost, if medical equipments or gadgets or anything is given free of cost, the very fact that consideration does not exist takes the transaction out of the ambit of supply. So consideration is a sine qua. It is the most important condition for supply to happen. So if it is not even a supply, how can it be an exempt supply? So it need not become an exempt supply for the purpose of your ITC level. Because even the exempt supply, which it talks about wholly exempt. Unlike the earlier exempt service definition, it talks about non-taxable services. Therefore, a possible view could be that when there is no consideration in this kind of scenarios where out of good intention, somebody is giving a lot of things for the COVID, then it is because it is free of cost, there is no consideration. Because it is no consideration, there is no supply. Once it is no supply, there is no question of exempt supply. But then, of course, the argument that is built forth is why not be safe and ask for zero rating? Well, let it be. If government is willing to give it, we can definitely accept that. Let me continue. Agreed to be made for a consideration by a person in the course or furtherance of business. Now, this in the course or furtherance of business is not an ordinary terminology which will be tested in many courts. I repeat, it will be tested in courts. Don't test it in ARs. No point in going to AR and asking for a question. I think somebody recently went and asked whether a director, there is a reverse charge mechanism, and the AR promptly answered that even for directors of the board, a director is not an employee. And now that AR ruling is flashed across media and shared across WhatsApps, and if you have 10 WhatsApps in the morning, 9 will be COVID and 1 would be this director news item. And then everybody gets into panic mode. Now what will happen? Well, there are enough decisions already. Even I have won some cases on this. There are enough decisions already on the topic to say that when a managing director or a full-time director or an executive director is identified as an employee, and he is an employee under the Companies Act, when the relation to the company and the director is clearly that of an employer-employee, there is no question of any kind of service tax or, for the matter, GST. And the same position will continue. Independent directors, obviously, of course, a different position, and therefore RCM is already being discharged. So this word consideration is important, and as well as the word in the course or furtherance of business is important. So in the course of furtherance of businesses, please do not unnecessarily test it in AR. There are enough decisions in the past, sales tax, as to what is business. I'll come across that in a couple of slides when I discuss that. So as I said, supply has got 3 segments, because after the retrospective amendment is now only 3. Clause 2, if you read, import of service for a consideration, whether or not in the course of furtherance of business. Now look at it carefully. Here, they are insisting that there must be an import, that too of a service, with consideration, but they don't care. It need not be in the course or furtherance of business. So even if you import services which are completely alien to business, there can be a tax. And then the third category, activities specified in Schedule 1, made or agreed to be made without a consideration. Now here, consideration, which is a condition in the first clause, is given a go by. So we look at each of these items. First clause combines consideration as well as in the course of furtherance of business. Second clause gets rid of business as a category. Third clause gets rid of consideration as a category. So I would read it as second clause and third clause being exceptions to the first clause. So we'll see the impact of it later when we go forward. Now, Obviously, when you say agreed to be made or agreed to be made, then obviously advances can also be taxed. And of course, we have a funny position where advances are for goods are not liable to GST, but advances for services are liable to GST. Now, let me give you a peculiar funny scenario. We had this problem. Most of you are aware of this windmill, solar items, etc. So what happened? There is an equipment. That equipment has to be supplied. That equipment attracts 5% GST. That equipment has to be installed. Installation attracts 18% GST. Now one fellow provides both. So his doubt was, am I providing a composite supply? Am I providing a mixed supply? Am I providing a works contract service? One fellow said, what you're providing is works contract because entire equipment, windmill, etc. is fixed to the ground. Solar equipments are fixed to the ground. Therefore, it is immovable. Entire package attracts 18. Another person said that, no, don't go there and all. It is composite supply. Out of the composite supply, equipment is the essential element. Therefore, 5% is fine for the entire package. Third fellow said that, no, both of you are wrong. You look at it, the installation is the essential part. Therefore, 18% should apply to the entire package. Therefore, government, immediately industry went to government. Government said, okay, all three of you are not clear. We are also not clear. So let's give a simple solution. 70% shall be goods, 30% shall be services. Which means they've completely ignored the definition of composite supply, mixed supply, and through notification they said 70% is goods and 30% is services. Now I receive an advance of 5 lakhs. Should I treat the advance as advance towards goods, or should I treat the advance as advance towards services? Or should I take 1,70,000 rupees as advance towards goods and 30% towards advance for services? And because one is taxable, one is not taxable. So when you try to give a solution and the solution is trying to solve a particular problem, it does create another problem for which there is no answer. Now moving on further, I said that the definition of supply in the first segment uses various words like sale, lease, license, rental, etc. Transfer. None of these terms are defined. If you go back to the pre-GST law, sale was very well defined in the VAT law. Transfer of property in goods. There must be a transfer of title in goods or transfer of property in goods, of course, of execution of a contract. I'm talking about the deemed sales. But main sale, transfer of title in goods. Sale was defined. If you take income tax, transfer was defined. If you take transfer of property act, lease was defined. And whenever any legislation tried to look at those kind of transactions, they tried to borrow a better term like transfer of right to use goods to cover everything. In this legislation, none of these key terms are defined. So what is a sale? We still don't know. Of course, we know by the Sale of Goods Act as to what is a sale. But whether GST law would look at it differently, we don't know. We'll have to wait to see whether some kind of transaction comes in which may not fit into those few terms. Barter is treated as a supply. What is a barter? We will immediately say, sir, barter is I have a book, you have a pen, you give me the book, I'll give you the pen. Barter. Well, that is commercial concept of barter. Should barter not be defined in the GST law? Should every term not be defined? Otherwise, how do you understand barter? Can there be a barter which involves multiple goods? Can there be a barter which involves goods and services? Can there be a barter of services? We don't know. So barter per se is not defined. Therefore, it will be interesting as we go forward as to who is liable in the case of barter. Again, that is also not specific. If I have a transaction, I have a commodity, I'm giving you the commodity and you give me a service in lieu, assuming this is a barter which involves goods and services. Who should pay tax? If you say both should pay tax, then can both claim credit? If both claim credit, what is the purpose of the whole transaction? So we need to look at why it was brought to tax. It was brought to tax because it was earlier, there were judgments which said barters are not sales, barters are not liable. So overall, they thought that through GST, they'll bring everything to tax. But without a mechanism to identify how to levy tax on barter, the levy itself can collapse because computation is critical for chargeability. If you're not able to compute a levy, then the whole thing can collapse. Now that brings me to charging provisions. In the past, if you take central excise, there was a clear levy whereby the levy of excise duty was an activity called manufacture, and manufacture was defined. There was a separate tariff called a central excise tariff, which dealt with excisable goods, which had a list of items which were subject to what is known as a tariff rate or excise duty rates. Government in their wisdom will issue notifications reducing it or giving some exemptions. Take VAT law. Every VAT act had a schedule of goods, and that goods had a VAT rate. Take service tax. The charging section also talked about the rate. Therefore, a rate of tax in service tax was through an act. Rate of tax in VAT was through an act. Rate of tax for excise duty was also through an act, Central Excise Tariff Act, which means it was not amended frequently. It was amended once in a year. So it became an important event. Budget became an important event. People started watching for it. Now, what Section 9 has done? Section 9 has said, yes, charging section, it provides levy on supply of goods or services or both at such rates as may be notified based on the recommendations of the GST Council. The moment you have said notified by the government, you have delegated the power to notify the rates. So they notify rates. And that is how 1/2017 was born for goods, 2/17 for exemption, 11/17 for services, and 12/17 for exempted services. All of us are very much aware of 1/17, 2/17, 11/17, 12/17. Now, unfortunately, we are not in the seminar where I can ask questions. If I can ask questions and put out your hands, how many times 11/17 has been amended? That will be a challenge. Even I can't answer that question. We have to count every item. So every year, every month, sometimes the rate of tax notification has been amended. That gives complete lack of clarity to the business, to the profession, to the industry, because rate of tax is something which should be frozen. You can't keep on changing the rates of tax. And what happens is that we now have this new peculiar, earlier days, rate of tax change will come through a GO. You will see the GO, read the GO and implement it. Now, first the GST Council meets. And while the meeting is in progress, the minutes of the meeting gets leaked somewhere. And while the GST Council is debating some decision, some authoritative WhatsApp comes saying that this is the rate of tax reduction or increase. Then in the evening, before that, one Twitter message comes. Then one WhatsApp message comes. Then finally a press release comes saying these are the changes. And unfortunately, most of the press releases will not say when it is going to come into effect from. And therefore, press release will indicate change. Companies and businesses and professionals will be waiting for changing the software to implement the rate of tax. That notification will come ultimately at a later point of time, and just one day before or the midnight of that change, like for hotels, what happened. Now, why all this? All this is because you have given away the power to notify rates to the government. And when you give power, significant power, delegate power, it so happens that it can be used, exercised regularly. There is nothing wrong. I'm not saying the power of the government is illegal. The government is fully right in doing their notification because they have the power. The question is, should they use that power? Now, that is wisdom. That is over a period of time, they've also realized, government has also realized that we should stop tinkering with the rates. But now COVID would prompt the government to look at the rates again. I won't be surprised if the council meets very quickly, either by video, obviously by video conferencing, to decide on changes to GST rates on account of COVID, because that is a very important one. In fact, I have represented today to the state government. We're going to shape it in a different way to see whether a probable deferral scheme can be introduced, whereby the states can issue a deferral scheme and say that you can collect the SGST and keep it till the 6 months period or 1 year period or 1.5 years period, and then pay it back to the government. It can be like an interest-free deferral scheme, like the old interest IFST scheme in sales tax, because these are hard times, difficult times. Where is the money? On one side, the employee has to be paid. On one time, overheads has to be incurred. Production cannot start. Sales will not happen. Exports is not easy because the other country is not going to accept. The operating working conditions will change. Our Prime Minister made a very important point when he said life before COVID and life after COVID will be very different. He's absolutely right. In fact, I'll just recall something. Some of you know what happened in 2011 when 9/11 happened, when that bombing happened in the United States. Nobody thought that travel would change like this. Travel has completely changed. Whoever thought of it? So the whole concept of security has changed, and everybody goes through waiting lines and scanning and body scanning and all those things we have accepted. We have gone it as a way of life. We wait in queues at 4 o'clock in the morning to catch a 6 o'clock flight because we know security will take a long time. Well, my friends, life will, even after travel starts, will now add disinfection tunnels. We'll probably have thermo scanners. We'll probably have self-declarations to say I'm not a victim or I'm not part of any COVID program or something like that. So life will completely change. So in this changed circumstances, business will be struggling in a very big manner, and government will be very sympathetic, and they will definitely try to give some kind of relief and rate. So I would be surprised if we'll have a series of GST notifications which would alter the rate of tax. Now, how does it happen? Because Section 9 confers the power on the central government to notify rates of tax, and that includes either increase as well as reduce. But I don't see any power in Section 9(1) which allows conditions to be put forth. A rate of tax can be, you can say 5%, you can say 12%, you can reduce 12 to 5, you can increase 5 to 5, you can do all that. But can you put 5% and then add conditions? Can you stipulate that you cannot avail it?
Sir, just a minute. Yeah, sorry to interrupt you, sir. I request all the participants to just check your for your SMS. We have made you the link because of some technical issues. Our mail is not working. Our branch server is not working. So we have sent you a SMS. You can download the PPT from the same. Sorry for. Yes, sir. You continue, please.
No problem. I'm sure they will just listen. All of them know the section by heart, so they don't have to read it.
Yes, sir. When you are there, sure. Yes, sir.
Now, coming back to the charging sections or charging provision, the power to specify rates exists, but can you say that the Section 9 is structured in such a manner that the power to specify conditions also exists? So, in that sense, if you read some of the notifications, wherever conditions have been put, they have added certain sections. In exercise of powers under Section 9, read with so and so, the number of sections have increased. This is probably to protect a scenario saying that this is not only a rate of tax notification, this could also be an exemption notification. Now I'll come back to a pet theory of mine. Take our real estate notification, the 3/2019, which made all of us wonder whether our English knowledge is poor or our reading skills are poor. But we went through that, we understood 3/19, we interpreted 3/19 because 3/19 is a bundle of conditions. Every developer has to go through those conditions. Now, does it mean that 5% is the only option? 5% is a convenient option. You pay 5% GST effectively, no input tax credit, customer is happy. Actually, customer should not be happy because the rate goes up. But is it possible to take a view that since this notification is all issued beyond Section 11 and uses the power of exemption also, it is a settled position of law that an exemption which has got conditions is not a binding exemption notification. I can choose to come out of the exemption notification and go through a full rate of tax. So it may be very well possible for people who are stuck in restaurants at 5% or people who are stuck in this kind of scenario of real estate 5% to revisit the story and see whether we can take a position that these are all conditions. Therefore, it is a conditional exemption. I don't want to avail those conditional exemption. I will therefore go to the residual rate, which is 18%. In which case, of course, land will be kept out of tax and only the construction will attract the 18%. That's a position, of course, litigious, but we'll have to see whether that is permissible. Then we have the concept of reverse charge. Reverse charge is not new to us because we learned from service tax. But people who are seniors will know that prior to reverse charge, in sales tax, there was something called as purchase tax. Purchase tax is the Bhishma Pita of all these reverse charge. So if you buy from an unregistered dealer, unregistered person, then you have to pay the purchase tax for certain kind of commodities under certain circumstances. Then purchase tax evolved, and reverse charge and service tax is borrowed from Europe, and we have implemented reverse charge for GST also. So reverse charge is very simple, that the liability itself shifts, the levy itself shifts to the persons identified. So we have now moved into two kinds of reverse charge. In one is a notified category, where certain segments are notified, The other is a specified class where we just saw this 80-20 formula in the context of real estate. But most of you are familiar with reverse charge. I'm not going to that. Now, let me go straight to understanding supply with case studies. Well, I'm aware that you got your PPTs in your hands over a period of time and you would look at it, but just let me try to give a brief of it. Imagine something like this. Somebody's taken an insurance policy for an asset or for, let us say, a ship. Now, because of some peril, this asset is affected. Equipment is subject to some fire hazard, or the ship sinks, ship collides with another ship, and you have an accident. Now you have an insurance policy. Now, based on the insurance policy, you make a claim. Based on the claim is processed, etc., and finally the compensation comes from the insurance company. Can you say that there is a supply by the insurance company to you? Because normally many people, when they interpret PPTs, keep moving down.
Sir, now on which slide we are?
I am in slide number 8.
Done.
Fantastic. Or enter. Yes, enter. Take it. Before that, sorry. Bashan, just go back. Yes. So typically, as I said, the accident has happened and the insurance company is giving a compensation. So can you say that there is a supply? Now, I'm trying to give graphics and visuals only to ensure that you are not bored in your house. And since you're so used to watching Netflix and Amazon Prime, you should not get that addiction should not go away. Therefore, I'm giving you some pictures also. So this accident has now resulted in compensation. So compensation can be called as consideration. So from an income tax perspective, an interesting issue arose. Some of the senior members will know. There is a levy of capital gains, and for capital gains there must be what is called as a transfer of a capital asset. So when a compensation claim was made and money was received, a question arose as to whether capital gains can be imposed. Tax on capital gains can be imposed. Matter of the Supreme Court, and Supreme Court said transfer presumes the existence of the asset and the transferee to whom it is transferred, and therefore they said this is not taxable. To get over the judgment, they made some amendments and they brought about extinguishment of rights, relinquishment of rights, etc. But the fact remains that transfer presumes the existence of an asset. So in a scenario where your asset is lost and you're receiving compensation, how can you say that the supply by an insurance company and the insurance company should charge GST? Now, insurance company will charge GST on the premium. Obviously, the premium that they receive, they will charge the GST. But what they pay you, is there a supply of a peril? I don't think there is a supply of a peril or an accident. The compensation that flows should not be taxed, should not be a supply. Now, you can extend this logic to any kind of compensation. It could be an industrial compensation. It could be some other compensation. Of course, many of you will refer to the last clause, agreeing to, forbearing to, etc. I'll come to that a bit later. I'll address that. But I'm just giving a basic principle as to compensation. Next. These are interesting European case laws. Now, just like how COVID has affected the entire world, GST also affected the entire world in the form of VAT as well as GST. Europe calls it VAT. So these questions have all come before in other courts. So look at these interesting scenarios. Farmers agree to discontinue milk production as per directions of government. So here we are, some people are saying government is exercising power. They are saying you are controlling the public and they're getting very upset with it. But what is government is doing is only for the welfare of the public. Stay at home is only for the welfare of the people. You stay at home, you are safe. You stay at home, your family is safe. You stay at home, your friends are safe. You stay at home, the others that you meet in the road and everybody else are safe. So government says rightly stay at home, and people, some people get affected saying this is my liberty, I have every right to walk out. And look at a developed European country, that government says please stop your milk production. You stop your production. A free country says stop your milk production, and then government says okay, we'll give you compensation because you stopped. After giving compensation, the doubt came as to whether the compensation is taxable. The European Court of Justice held that tax is a consumption-based tax, and tax cannot be levied without consumption of a service. Where is the consumption of a service? In the absence of a consumption of a service, you cannot say tax can be levied. Then there was another scenario where there was an excess production of potatoes, and therefore government again ordered that potato production should be stopped, and farmers were given compensation. Again, it was held that it was not taxable. I'm not even reading the names. The PPT is available to you. You can use those names. Next. This was what I talked about, where food and beverages are provided. Just go back. Go back. Here, one slide. That railway symbol. Food and beverages are provided to passengers, and let's imagine this. Now, of course, train servers are not running, but when train servers were running, you will recall that you will pay one flat rate for a ticket, and while you are sitting in the train journey for about 6 hours, human tendency is when you simply sit, you get hungry. I think all of us are going through that process at home also. Most spouses are worried only because of that. This man is not only at home, he is also hungry all the time. And the poor lady keeps on, chai or something, she has to go to the kitchen. Of course, our man also helps, but the help is not really complete because the cooking is continuous process. In fact, when industry asks for continuous process industry exception, the woman at home should ask for the exception because they're always in the kitchen. Children and husband both are at home. That's the end of the story because different food has to be prepared. So while you're sitting in the train, you're bored. And the psychology of a person who's bored is that he gets irritated. So the best way to quell a person's irritation is to feed him. Give him something to eat, he'll be quiet. So in the train, they keep on giving you something to eat. Every 1 hour or 1.5 hours, you get something to eat. And that's all part of a ticket. Now, the vendors who are giving these food items or beverages or whatever, they have to be paid by railways. So railways came with this unique idea saying that we won't pay you. Instead, we allow you to advertise in our bogies, in our coaches. So some of these companies are now advertising in their coaches, and because of that, they are not getting paid. Now the question is it a barter? Next slide. Consideration is defined. Payment made or to be made, whether in money or otherwise, in respect of or in response for the inducement of supply. So if you look at it carefully, the first clause says whether in money or otherwise. Now next clause is different when it talks about monetary value. When they talk about monetary value, they talk about forbearance. This is not forbearance. This is an actual voluntary transaction of goods being exchanged for services or bartered for services. So here the question is for the railways, when they allow the railway coaches to be used for services, they are being paid by goods and beverages being given to the passengers. For the vendors, for the goods and beverages being supplied, they are being paid by being allowed to advertise. Now, is it money or otherwise? Obviously, it is not money. So then what is the word otherwise? Can we interpret otherwise to say that it can cover only money and money related mechanisms, like a payment wallet or some other mechanism which is akin to money and not a monetary value? You cannot attribute a monetary value because monetary value falls under the second category, which talks about something else. So that's an interesting thought process which I thought I will share. Next. There are some decisions. Valuable consideration takes color from the preceding expression cash or deferred payment. Therefore, it can cover only other monetary payments in the nature of cash or deferred payment. So there are judgments in sales tax law which said that valuable consideration should necessarily have the same character or color of cash and cannot be something else. That was the judgment of the Supreme Court way back in 1967. Next. Next, we have discussed this. Next. Well, ironically, all temples are closed. So, in a way, this slides at least gives an impression of what I'm talking about. God is in our hearts anyway. So, temples are, these two famous temples are there, and then there is this place which you are all familiar, Mahatma Gandhi Vidyapat, and then you have this Sulabh sanitation movement. Now, why are these pictures given? Next slide. All these are judgments. Sale of publications spreading the message of Sai Baba cannot be considered as business. Supreme Court in Sai publication. Of course, we have discussed this case law many times in the seminar, and many people have said, no, sir, business definition is wide, etc. Even then, I would say, please go through these case laws. These case laws still have relevance. So, what happened in the case of Sai Baba was that, what is the objective of our trust? All of us are aware that most of these are either religious bodies or charitable trusts, which are formed only for certain specific purposes. And whatever they do in any kind of small business, big business they do, the revenue that they generate is meant only for the objects and has to be spent for the objects. Therefore, if they are going to publish publications spreading the message of Baba, Supreme Court said you cannot consider as a business activity. Then you have the Tamil Nadu temple, where after you finish the darshan, you walk out, there is a prasad that is given to you at the counter, assuming you pay for the prasad. There is a sale of prasad. Again, Madras High Court said, sale of prasad is not business activity. Then there is Sulabh International, where a charitable organization was engaged in construction of latrines, and it was held that it is not a dealer. Then again, you have the Andhra Pradesh temple case, where food was sold in canteen run by a temple. Again, API Court said it is not business. Mahatma Gandhi Kashi Vidyapith, publishing admissions forms does not constitute business. University is not a dealer. Providing accommodation to devotees by trust of temples without profit motive is not business. And then you have the best judgment of API Court, where they say sale of business is not business. In fact, many people ask me, sir, what happens if there is a slum sale? Is it taxable? Of course, government has said it is exempted. There is an entry which says, division, etc., transfer, going, concern, everything, it is exempted. But I would go one step further. If I sell a division of mine to some other company, I have two divisions, one division I sell. Can you say that I'm engaged in the supply of divisions? Because supply means in the course or furtherance of business. My business is not to sell divisions. My business is sell to products or goods. Therefore, the API Court case was an interesting case law. It said sale of business as a going concern itself is not business. So all these principles are still relevant in the context of GST, because the very same terminology of in the course or furtherance of business is still used. Next, please. Just to focus on the joke, to get it light on a lighter side, this man goes to the shop, and the shopkeeper says, yes, it's a beautiful ring, and she'll definitely pause for a moment before saying no, because no woman can resist the sparkle of a jewelry. They will at least look at it before saying no. So for all the young bachelors, be aware, good jewelry doesn't matter, good hearts equally matter. So here is a situation where this we have discussed many number of times, and this is the famous example which the government also gives. But let us look at it from a dimension which is relevant. You're a chartered accountant. You're a practicing chartered accountant. Let us say you're a practicing chartered accountant, and you've got a lot of jewelry which you've earned on your own, you bought on your own, or your husband has been nice enough to give you, or your father has given, your parents have given you some wonderful jewelry. But you're a practicing chartered accountant. You have this jewelry at home. Now, one fine day you decide that, okay, on the spur of the moment, I don't want this old type of jewelry, I want new type of jewelry. So you go to the jeweler shop, you give the old jewelry, ask it to be melted and convert into new jewelry. So the question arises whether the lady chartered accountant in practice who is registered for the purpose of GST is making a supply of old jewelry for the purpose of new jewelry. Because all the time we see examples of old lady going, all of us are aware the old lady is not engaged in business and therefore we can easily say that she's not engaged in business. But what happens if it's a young chartered accountant who is very much in practice, who has got jewelry, who does the same transaction of giving the old jewelry and getting new jewelry? No, is it a supply? Next. I'll develop this case study further after going through another case study. Let us say this lady who chartered accountant who sells her jewelry. Her husband says, what is this? You are selling your jewelry. He is also a chartered accountant. Both of them are partnership firm together. He says, if you sell jewelry and buy new jewelry, I will sell my old car and buy a new car. So the hubby chartered accountant also decides to sell his car. He has purchased a car in 2016 and is now selling it for 21 lakhs. So now the question is there a supply by Mr. X, who is a chartered accountant? Is there a supply of jewelry by Mrs. X, who is also a chartered accountant, and both of them are registered for GST? Next. I don't see any reason why the press release given should not equally apply to a CA as it applies to an old lady. So even though sale of old gold by an individual is for a consideration, it cannot be said to be in the course or furtherance of his business, as selling of old jewelry is not in the business of the said individual. You may be a practicing chartered accountant, you may be providing services, that is your professional activity. This gold which you sell is not incidental to your profession. It is not ancillary to your profession. It's not the nexus which you can attract to the business definition. It is an independent activity, it's got nothing to do with business, and therefore the lady is safe. There is no question of GST. Similarly, FAQ in 2018, when an individual buys a car for personal use and sells it after a year to a car dealer, the sale of old and used car is not in the course of furtherance of business and not a supply. Same logic should apply to the chartered accountant. Just to give you one more comfort, look at this Bombay High Court decision. Sale of used car by dealers who was a dealer in chemicals are not sales in connection with or incidental to the business of manufacture and sale of goods, and therefore not taxable. So here is a case of a dealer who deals in chemicals, who decides to sell a car, and even then Bombay High Court said that he is not a dealer for the purpose of car, and therefore sales tax could not be imposed. You can draw some analogy from that to say that he is not in the business of selling cars, he is in the business of selling chemicals. He is not in a profession of, he is in the profession of chartered accountants, he is not in the business of selling cars. Therefore, this 21 lakhs should not really matter. Next. Of course, this is, like many of us who are in our 50s or just entering 50, we have this wonderful habit of talking to our kids, where we say, in our days, only after the entire ball pen ink is over, we'll go to the shop and buy another refill and remove that old refill and put this refill, and expect great gratitude of some kind of favorable response from our children. And most of the time the children will be amused by the fact that we had to do all this because they live in a completely different era. And we can't blame them also, because let's look at it this way. When we were in school, or those of us who were in 50s were in school, were entering 50 were in school, air conditioner was not there. But many of the our kids are born in an environment of air conditioners. Most of them are blessed and they're well off and born in different circumstances. So they may not even know a scenario where things don't exist. So it's very easy for people to say that different people have to understand and children have to move up to this. But you need to understand that children are also not exposed to this. Their lifestyle has been always one of goodies and plenty. Why I'm saying this is very important, because many of you have children at home, were all locked up, in the sense that they have pent up energy which they're not able to exercise. They're not able to go out and play. They're not able to run about, and they don't understand this lockdown. Some of them understand, but some of them cannot understand. So no point in giving them lectures like, look, we used to listen, this used to happen, etc. You need to bring them to tune and make them understand the consequences of what can go wrong if you go out, rather than give our own examples. So in why I'm giving this example is that this illustration is a scenario where employer had a factory running, employer had employees. We may soon have a problem where employer may not have employees. Two reasons. One, many of them are migrant labor, they've left and they're not going to come back because each of them has their own fear. So only some people may be coming back. And those of them who are in affected areas will not be allowed to come back. So it's going to be not going to be easy to get employees, especially in factories which are far flung. Assuming everything comes back to normal and people have employees. Now, obviously, employees are to be given food. They are staying there. They'll be provided breakfast. They'll be provided lunch at subsidized rate. So, if let us say 100 rupees is the cost of breakfast and lunch, the employer incurs the 100 rupees cost, but recovers only 35% from the employee. Is there a supply? Next. This is an interesting decision where public offices in Finland provided legal services free of charge or on part payment. The European Court of Justice held that payment made was only a part payment and did not cover the whole amount of fee set by law. Although part payment represents a portion of fee, it was fixed based on recipient's income and assets and not based on the professional fee like number of hours, etc. The link between the services and the payment was not sufficiently direct for the payment to be regarded as a consideration. Now, this gives an idea that when I receive only 35% or 25% of the cost which I incur, it does not even have the character of a consideration. Of course, we'll say contract act consideration not be adequate, etc. But from a GST perspective, does it constitute consideration, especially when ECG has held that only a part payment made cannot constitute a consideration? This is one way of looking at it. Another way of looking at it is the employer engage in the supply of food. Is it his business to supply food? When he recovers 35% as cost instead of 100%, is he providing a supply of food services? Can you say that it is his business to supply food services? The answer will be no. He is engaged in some other activity. Next. Third category, third argument. Inevitably, the employment letter or employment contract would have said that you will be given food at subsidized cost. So it's part of employment contract. The employee agrees that he will work in that organization because he is going to be paid wages, plus he'll be given food. Therefore, he has rendered his employment services as an employee for the purpose of getting food as well as wages. He is aware that this is part of his package. And therefore, when it is a service by an employee to an employer, you can't again relook at it from an employer perspective and then say, no, this is taxable. And direct decision from a service tax perspective. Same problem came in service tax. Service tax authorities took a view that this is a service. Matter went to AP High Court. It went before Justice Ram Subramanian, who is now the Supreme Court judge. He gave a brilliant paragraph. He says, once the activity undertaken by the petitioner in the form of supply of food to its workers at a subsidized rate is understood to be part of an industrial obligation, it is unthinkable that the same can be construed as a service falling within the definition of service under section 65B44. And therefore, API Court said it is not taxable to service tax. The same analogy can be extended to GST, and one can take a view that the recovery of 35% is not involved in a supply. Then the larger question is, sir, okay, I don't pay GST on the money recovered from the employee. Can I avail credit of what the contractor has charged? Now that could be tricky, because if you avail credit and not pay tax on this, you may get into some other issues. So fundamentally, you take a position both sides. I will not claim ITC. I will not also pay GST on 35%. This is just a view. This is my view. Anybody can have a different view and can be well supported also. Next. This is our forever topic in seminars. There are full day seminars on real estate. There are half a day seminars on real estate. There are 2-hour seminar discussions on RRC. No, every time the same question keeps coming up. Sir, what happens? Development rights, JDA, is there a new supply, etc., etc. I will try to picturize it in a very different way. I've dealt with it extensively legally and with judicial principle, but I try to look at it from a layman's principle, because most of the clients who come, they give their original thinking thoughts. Take a landowner, 95 years old. He comes along with his son, daughter, and grandchildren and says that I have entered into a joint development agreement with the developer. Everybody is saying I must pay tax. Everybody is saying this is development rights before this new notification. Therefore, you as a landowner should pay. Reverse charge will not apply. Because the reverse charge is that particular amendment came 2019 when amendment came, 1419 cutoff date. Now, first question is, let's look at it from both developer side as well as landowner side. Assuming you're examining a situation whether landowner is liable to pay GST on development rights, when a person who's got an asset which is inherited and is aged 95 and is giving his land and getting in lieu of land, let us say 12 flats or 6 flats, can you say it is a supply in the course or furtherance of business? He is discharging he is clearing his assets, he is liquidating one asset for another asset. Can you say that it is an activity in the course or furtherance of business, especially taking into account the fact that he is 95 years old? Even assuming he is not a 95-year-old man, if he is a salaried employee working somewhere, or he is a businessman which has got nothing to do with real estate, merely because he enters into a transaction of JDA, does he become a real estate businessman? Therefore, is it a supply in the course of furtherance of business? That will be the first question. That answer will be no. Now, if it is not a supply in his hands, can you immediately shift to developer post 1419 and say, reverse charge mechanism applicable because this is a supply in your, this is taxable as per notification which says RCM is applicable. So my view is that it is very, very easy to say it is taxable, but it is interesting to say not taxable and support it with legislative, which good arguments. Of course, the risk of a dispute or risk of litigation always exists in all these transactions. It is not as if it is completely free. But look at it from a contracting party. If there is no solution at site, if both of them are taking rigid positions and there is no solution at site, you have to move forward. You have to close the transaction at some point of time. Next. Many of you are familiar with this, where a view was expressed to say that benefits arising from land should be treated as immovable property. Profit is identified as profit pendre, and therefore it is immovable property. And development rights are all rights flowing from the land. Fishing rights can be called as immovable property. Leasehold rights can be considered as immovable property in some cases. Why not development rights? So development rights could partake the character of immovable property. If it partakes the character of immovable property, there is no question of GST. Of course, somebody will argue and say, no, sir, where is the exception for immovable property? Service will cover everything. Service can, because we look at the language of service definition, service means anything other than goods. Anything other than goods postulates a thing which is not goods. Immovable property is not a thing and has always been perceived as opposite of goods. And there are specific entries where the stamp duty is being levied under the state's powers. So GST is still not the immovable property, and regularly you have FM speech, at least Mr. Jetli's speech used to say We should bring real estate into GST. Why should you bring real estate into GST if it is not already there? Therefore, immovable property is definitely out of GST, and development rights can be construed as part of them. So one argument would be that landowner is not a supplier because the transaction is not a supplier. Another would be that entire development rights will constitute immovable property. Next. The concept that development rights can be considered as immovable property, we have a judgment from service tax period, DL of commercial projects. The concept that supply is not in the course of furtherance of business, there is a decision of the AP High Court, where in the context of wealth tax, one fellow said, I have land, I've got into a JDA. Since land is an asset which attracts wealth tax, since I've got into JDA, this is my stock and trade. Therefore, I'm engaged in business, I'm not liable. Court said that when you enter into a JDA and given your land, there is no question of it becoming part of your business activity. And therefore, they said you're not engaged in business and hence you pay tax on the land. So that principle can be extended here. Next. Then, of course, we have this Basanta Green. A very practical decision. Let's again go back to the transaction of the 95-year-old man and the developer. Now, why does the 95-year-old man come to the developer? He is not able to sell. There are no buyers. Or he doesn't want to deal with any kind of fishy situation. He wants pure, clean transactions. Developer is also not in a position to buy land, no cash flow. But developer has got money to fund the construction. Owner cannot construct, he cannot demolish and apply. So they come into a deal. Okay, I'll give you rights, I'll give you possession, I'll give you power. You demolish, you construct at your cost. I won't pay a pipe. You construct at your cost and then hand over me 6 flats. So what is the owner getting? Owner is getting 6 flats. What is the developer getting? Assuming 4 flats. So developer gets 4 flats, owner gets 6 flats. And the underlying land, originally landowner had ownership of land which was the imprint or the blueprint for 10 flats. Now he is having only land for the 6 flats. The other land, undivided share or imprint of land, he has given away to the developer to pass it on to customers. Now, who has incurred the construction cost? Developer. When developer incurs construction cost, he incurs construction cost for the entire 10 apartments. And when he gives 6 to the owner, he is not able to recover a paisa from the owner because that is the agreement. So what does he do? He doesn't suffer loss. This entire money which is spent on those 6 flats, he loads it into his project cost and arrives at a selling rate for an apartment for the 4 apartments. And on that he pays service tax. So the argument before the tribunal was, whatever was the cost which I incurred for putting up the apartments for the owners, I have already captured it in my overall cost and my selling price for the other 4 apartments. And therefore, I have already paid service tax even on what I have constructed for the owner. That was accepted and that is being accepted. Now that analogy, which is applicable to service tax, will continue to apply in GST. It is very well possible to take that argument to say that GST has been discharged. You are saying I have to pay on the one construction done for the owner. I paid like this. Why are you insisting on something else? Next. Then somebody comes and says, no, we don't want litigation. We want the matter to close. We want to pay tax. A lot of people are also confused as to how many taxes are there in joint development agreement. If you are going to the payment of tax route, I would say that the first is the tax in respect of apartments which you give to customers. The second is the tax in respect of apartments which you construct for the owners. The third is the reverse charge on development rights, which you're assuming are willing to discharge. Fourth is a possibility of the owner selling the apartment subsequently. Now here, if the owner is going to sell these apartments subsequently to customers, even before CC, there is every possibility the owner would also be liable to GST. and he has to register and obtain GST. So the advisable for the owner to wait for the CC and then sell it as immovable property. So assuming you decide to avoid any kind of litigation and decide to discharge the GST on construction for landowner. Normally, you would have read 3/19 and said that I'll follow 3/19, I'll follow this comparative rate, take the rate adopted for one of the customers nearest to it, and then apply it for the owners. You're also welcome to look at Fakith and Gulati, which is an old case law, consumer case law, where the Supreme Court actually said the consideration for the construction of the 6 apartments of the owner is nothing but the land value for the 4 apartments given up by the owner. So he gives up land for the 4 apartments and gets 6 apartments in construction. And that should be perceived as a construction, was the view of the Supreme Court. And that can be one methodology for calculation. Next. This is a famous joke where a person says, I am going to withdraw my resignation. Why are you withdrawing your registration? Because whichever company I want to join, they have hired my boss also. My boss is the reason for my resignation. Now, resignation happens in different ways. He suddenly quits. He's got a 3 months period of notice he doesn't follow. Now, let us assume post-COVID, things can change. What can happen? Various industries which we know might fail. New industries might be successful. For all you know, this work from home could become a new norm. The companies would realize that people working from home is more efficient because you don't have to ferry all the employees to the location. You don't have to provide food to them. You don't have to hire, you don't have to construct space, lease out spaces, power, AC, consumption, water, all those things you can save. So except for critical data center work or other work, they may decide to outsource, saying that this is more efficient, plus this fellow works a little more when he's at home. Now, there could be some industries where somebody may not like it, he suddenly quits and joins some other company. So he just leaves without a notice. Now the agreement says, employment contract says, if you go like this, your 3 months notice period will adjust against whatever payment is due. So is it a supply? Next. Multiple views. One view, of course, people say that go and read Schedule 2, therefore it is a supply because there is a forbearance. But 7(1)A was completely recast from 1/7/2017, whereby, in my view, and the view of many professionals, is that Schedule 2 has lost its charm. The way 7(1) and 7(1)A should be read is that if there is a supply which falls within 7(1), if it is a supply of goods or supply of service, you have to look at Schedule 2 to understand. So Schedule 2 is only a classification mechanism and does not become a deemed supply mechanism, unlike the declared service era. Therefore, we can argue that some of the items mentioned there are not even supplies. Next. Agreeing to the obligation to refrain from an act or tolerate an act or situation or do an act is taxable. Can you say notice of pay is taxable? You can very well say notice of pay is not taxable. Mutuality can still argue. Clubs are not liable. Of course, renting people are willing to pay, but it is open because none of these provisions have a life on its own. They are all now hinging upon 7(1). It must fit into 7(1) first, then it could become taxable under the section schedule. Next. Of course, notice pay, some judgments have come saying it is not taxable in service tax law. Next, we'll skip those also. This is a very interesting judgment of the Australian Federal Court. Why I'm giving this is agreeing to pay or forbearing that particular language is not our original thinking. We borrowed from Australia, copied from Australia. If you copy from Australia, you must also copy the consequences. That section which was there in Australia was tested before the court. And the court said that despite this language, it is still not taxable because they said supply for consideration means You must supply for consideration. Consideration must be for the supply. Therefore, when an employee in a fit of anger shoots an email, shoots an SMS or a WhatsApp message saying, I quit, and leaves, and 3 months money is adjusted, where is the supply from the employer for the consideration, or where is the supply from the employee for the consideration? Yes, employee has received money. He has received some money, but is that money supported by an underlying supply? No, he has only quit. He has not provided anything. Therefore, supply must be for consideration. Consideration must be for supply is a view of the AP, of the Australian Federal Court, in the context of the very same language which we are now discussing, that is that forbearance, etc. Next. Next, please. This is my favorite cartoon. Go back. Just go back a bit. Yeah. No worry here. Going so far. Favorite cartoon because, of course, I have a dog in the house, and you might have heard the dog barking for some time because he's quite upset that I closed the door. Typically, over a period of time, the dog becomes part of the family in many ways, and some of you who are dog owners would know this. So this is a simple point where the dog says, why should I put the money in? After all, I only sniffed your food. So typically, this example I've given is in the context of cost allocation. People are going crazy on this cost allocation. For example, let us take a case of a company based in Ahmedabad, headquartered in Ahmedabad. Now, when a company is headquartered in Ahmedabad and has got branches or units across the country, there are certain management costs or corporate costs which are incurred in Ahmedabad. Ahmedabad would hire chartered accountants, advertising agencies, banks, etc. Therefore, there are third-party costs. Then there could be CFOs who look after the entire organization, CTOs who look after the entire organizations, CEO who plays a big role for all the locations. So there are three costs: third-party costs, employee costs, IT system, and management costs. Now the question that arises is it mandatory that Ahmedabad should allocate costs across all jurisdictions? Is there a service being provided? Now I'll go back to that section 7.1 without going back to the slide. I'm just recollecting from whatever is said. Activities specified in schedule 1. One of the activities specified is that supply of goods or services between distinct persons. When I'm incurring the cost at my headquarters, I'm not supplying a service to them. When a CFO is an employee of the company, he is not employee of Ahmedabad, he is employee of XYZ Limited. When a CEO takes a vision that the AP unit should be expanded, it doesn't mean that he is providing service to the AP unit. He is providing service to the company. So first, employee cost should be kept out of the equation. Another reason is that employee to employer is not even taxable. And now people want to say that the proportionate employee cost recovered becomes a supply. This is absurd. Primary itself is not taxable. Employee to employer is not taxable. Salary is not taxable. But proportionate salary recovered is taxable. And that to add a 10% margin, it takes you to the heights of absurdity. Therefore, employee costs, in my view, should be kept out of equation. Then there are inherent costs, management costs, which are germane to Ahmedabad. Corporate offices there. Therefore, they have corporate costs. Why should you allocate? Third-party costs, it is up to you to allocate because you may have a GST there, and it is up to you to take advantage or not take advantage. But there is no compulsion that you must allocate all costs. Next. The larger question is, yes, section 7 says so, schedule says so, that it is a supply without consideration. This is a pure legal question. We have not advised saying that go by this and not pay tax, but we have said that you can take a position based on this. We have advised saying that employee cost is definitely out of the equation, but the third party cost, it's definitely a lot of people are recovering. Can there be a levy without a deeming fiction? you want to say that Schedule 1 activities are taxable. Fine. Interstate supply of service between distinct persons is taxable. Fine. Supply. Granted. Tell me how to tax it. You have to tax it. If you have to tax it, you have to go to charging section again. Charging section says there shall be levy of a GST on a supply of goods or services or both on a value under section 15. And 15 says transaction value means price paid or payable. Where is the price paid or payable for an interstate supply of goods or interstate supply of services between two distinct persons? Yes, I'm not denying that it is mentioned in Schedule 1. I'm not denying that it is mentioned in 7.1. So it is a supply. It is mentioned in Schedule 1. What follows? Levy. Bringing back to my topic. The levy flows through charging section. Charging section, if you read carefully, it says on the value under section 15. And value under section 15 is a transaction value, which is a price paid or payable. That is one of the conditions. Transaction value, price paid or payable, price must be sole consideration, buyer must not be related. If price paid or payable does not exist, there must be rules to say how to determine price paid or payable. There are no rules. Of course, you will say that, sir, there is a rule which says inter-unit, whatever is invoice value. There is only a mechanism which they say if you want to pay tax. But I am going to the primary point of levy. Where is the consideration? There is no consideration. Can you still tax it? Yes, you are saying it is supply. If it is supply, have you deemed something as consideration? Have you deemed something as value? Is there a deeming valuation mechanism in section 15? In the absence of that, it will be very difficult to sustain this kind of a levy. Next. 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 You can skip this. Oh, you crossed the time. Next. Next. This is what I talked about. Transaction value means price actually paid or payable for the said supply of goods or services or both. Supply and recipient are not related, and price is a sole consideration for the supply. And sole consideration is an interesting concept which does not exist in sales tax law or service tax law. It was there in excise which was brought into GST. Now, assuming a transaction is affected or tainted by the fact that the buyer gives something else which has influenced my price. You have given me something else, and therefore I've charged less. Now, all your illustrations say add a monetary value of that. But I'm saying, where is the authority? Price is no longer the sole consideration for supply, then transaction value collapses. If transaction value collapses, the next subsection says to be prescribed. In the prescribed is defined in CGST Act as prescribed by rules. So prescribed can be only rules, not circulars. In the rule, there is no rule for attacking scenarios where there is no sole consideration. Therefore, still there is a lacuna as far as the sole consideration point is concerned. Next. Next. 15.4 says that where value of supply of goods or services or both cannot be determined under section 17.1, then it must be going into that. Last set of case laws I have put just for the sake of completion of the exercise. Revenue Bar Association, which I'm the vice president, we challenged this in Madras High Court, the constitution of the tribunal, by arguing that, so Datar argued, where it was contended that in the absence of a majority of judicial members, the whole mechanism fails. You cannot have a majority of technical members. The court accepted all the arguments and struck down the tribunal. So what happens now is there is no GST tribunal. And given the COVID-related developments, we are unlikely to see any kind of funding which can happen for this. So there would be problem in terms of litigation, especially at first appeals, because matters could get pending for some time. Next. Next question. I think that's my last slide. Let me again thank the Ahmedabad branch and WIRC, the efforts they've taken to have this kind of a conference where one can address 500 people or more than that without seeing them. And I hope I've given some value addition to you, and I've shared some of my thoughts. This is also the first time which I'm speaking on an active. I've been in webinars and industry seminars, but that is very limited. I've not spoken for such a long time. I just realized that speaking for a long time can also be quite a strain. But still, we've all enjoyed the GST journey, and we'll continue to enjoy the GST journey. I wish and pray that all of you remain safe and at home, and nothing happens to any of you or any of your friends. We'll come out of this turbulent and tough time, come out shining with new ideas, new thoughts, and new learnings, and much more better human being. Thank you.
Sir, thank you very much. And though it was for some time, there was some technical problem, but you were able to manage the same. So for that, thank you very much from the bottom of the heart. And friends, one more thing I would like to know, that the book which has been written by Sir recently, that is Taxation of Digital Economy, which is available on the Amazon, and it's a very good publication, I can say. And in coming years, where everything is going to be a digital, as you have witnessed today, that our webinar and knowledge dissemination is also in the digital way. I'm sure if you can have this publication, which is available on Amazon, you will be benefited.
Vishan, let me talk a few minutes about the book, since I have the advantage of an audience who are my friends. I wrote this book visualizing what could happen a few years from now as to digital economy. It's a book which covers international tax, direct tax, as well as indirect taxes. It covers every aspect of PE and virtual currency and things like that. Surprisingly, the economy is going to shift to digital economy much faster than I had envisaged. And some of the thoughts which I had expressed is already being reflected in the union budget. So I am happy to note that changes are faster. So this should be an interesting addition to your library. I would welcome your feedback once you go through it. Thank you.
Yes, sir, and we are so much grateful to you that as we all are aware that you've been invited at OECD for presenting your paper on digital economy, taxation of digital economy. So it's really a great movement for all of us, and from bottom of my heart, and on behalf of Ahmedabad branch and managing committee members, we are thankful to you for sharing your views. Along with the law, you have taken the case studies, live case studies, and try to give your opinion, which I am sure that many of members are benefited and able to resolve their issues. Thank you very much again, and all the participants for attending this seminar. We are going to meet at 5 p.m. tomorrow, and hope you all have received this presentation. So we'll definitely share the same if you have not received. Also, if you have any questions, then do write to email ID of Ahmedabad branch. We will collect it. We will send it to Vaitheeshwaran sir, and we'll try to get his views on the same. So, friends, thank you very much for your patience here. Thank you.
Bye-bye.
Bye. Bye, sir.